Yo, what's up all my trader homies? Kevin here from Touchdown Trade. Today we're going to be talking about a ticker, UONE, Urban One, that has gone from $1.50 per share and spiked 4,000%, over 4,000%, and hit highs today of $54 a share. Absolute insanity. It's gone El Loco on us. Why is this happening? Is there still room to profit from it? Should you trade it? Should you not trade it? This penny stock has gone absolutely nuts. Today we're going to talk about what's going on and what you can do to make some money off of it. So let's jump right into it and get this started. Alright guys, so this Urban One, ticker UONE, has gone absolutely berserk the past week here, spiking about over 4,000% from lows back here of $1.50 to up pre-market today of hitting highs of near $55. So what in the world is going on here? Before we get started, do me one big favor. Punch the like button in the face for me and hit that subscribe button as well. Touchdown Trades is our channel and we're all about swing trading, live day trading, market analysis, what's going on in the overall market, and the top swing trades. We do 2-3 videos of that a week, so make sure you subscribe. So let's jump into this UONE analysis here. So what we have here is the definition of a squeeze. Okay, it's a penny stock, a super tiny micro float of under 1 million shares. And what the float is, you guys probably already know, but I'll just talk about it real quick. It is how many shares are available to be traded in a certain ticker on any particular day, right? So if a ticker has a float of 1 million shares, that means there's only 1 million shares available to be bought or sold. Okay, so a ticker with less than 1 million shares that's been doing, this day it did I think 30 million shares of volume. This day 30 million, yesterday did 40 million, and today a little bit under 30 million. So absolutely huge volume, okay, on a ticker that hasn't been trading that kind of volume ever. So why is it going on? So Urban One is a media broadcasting company, radio stations, television stations, and that kind of thing. Okay, so in their audience, who they gear their media towards is the African American community. And you guys know what's going on, that poor gentleman in Minnesota who lost his life tragically, and what that has led to has kind of created a frenzy in the African American community and the protests that have been going on to kind of set some legislation for the standards of the police department. Now, I'm not going to get into that or politics or anything of that sort, but it has created a buying frenzy in this ticker, and that's for sure. I'm not sure why. If you guys have any idea of why that has created the buying frenzy, the particular news that started this day back here, leave that down in the comments section for me. I'd love to have any more information if you guys have it. But what happened, the news that set it off doesn't account for this move, okay? It doesn't warrant this move. What is going on is called a short squeeze. On this first day, you have people getting short, and they never had an opportunity to get out. It just spiked, right? It never let them out, and you have shorts trapped. And you have the shorts buying, covering their position, and you also have huge volume from retail traders coming in on such a small float that creates a squeeze up, right? So I just saw an article online about the top 10 stocks owned currently on Robinhood, and this company is one of them. And that's huge because if Robinhooders are buying thousands and thousands of shares and there's less than 1 million shares available to be traded, and they're just holding and not selling, there's no more shares available. So when somebody wants to buy, which direction is it going to go? There's only one direction, and that's up, okay? And that's why this is happening. Should you buy it? Well, let's do some analysis, okay? Let's break it down from a 3-year weekly chart. The high previous to this squeeze was back here at $4.80 something cents. So It's obviously at all-time highs, and let's check out an hourly chart and just draw out the trend lines. We got a trend line here from the second day, or the third day. No, this is the second day. That's the second move. Here's the first move's high on the second day, and here's the first day high day. Okay? So let's break it down to a 5-minute chart and see if there's anything we're missing. I guess you have this pivot, this high day pivot here. I traded it the past 2 days and made $600 each of those 2 days just on quick little dip buy scalps. And I bought the dip here, sold it here. I bought the dip off this pivot and sold it to the quick spike. So should you buy this thing and hold it? No way. There's just too much downside potential. It's going to end up going back down towards where it came from, right? But there is also spike potential with these shorts trapped. It's selling off pretty hard right now. And there's also the potential of a secondary offering. When companies make moves like this, they need to raise money, raise capital to reinvest in the business. What they do is called a secondary offering. And that's where they will offer more shares to the public at a discounted price. And what happens when that goes on, the stock will usually drop. And it will drop even lower to the offering price, lower than the offering price actually was. So let's say Urban One does an offering at $20. The stock's just going to absolutely tank below $20. And that's this ticker is at a very, very, very high risk of a public offering because it's trading at just huge astronomical levels right now. And once it starts to go down, the Robin Hooders are going to panic out. You're going to have your retail traders panicking out, and that's just going to create a huge sell-off. And I'd be willing to bet this thing touches $10 next week. You know, but there's also a chance it could go to $80 or $90 first. And that's going to be created by just more buying pressure, and the push back towards the 54 level. So here's an article kind of explaining some logic behind the move. And it's basically saying that Carver Bancorp and Urban One are two companies that serve the black and underrepresented communities. And the shares doubled as traders kind of wanted to support the black community based on what's happening right now with the protests and the protesters and such. So that kind of just reiterates what I was saying earlier about the move, the initial pop here, and that just created an opportunities for shorts to get trapped in this area. And then the rest is history, and you have the move. So my hypothesis on this is to stay away. I'm not going to touch it personally because I think it's coming back down sooner than later. But if it does want to spike and it starts to perk up and volume starts coming in, I'm not going to shy away from trading it, but I'm going to be in and out, and I'm not going to buy it and marry it. This is not the kind of company that you want to marry. This is like the side chick to your wife, right? Your wife, you buy the house for, you make the long-term plans for. This is the hot 21-year-old who you rent the apartment in Midtown for, and then you kick her out after a couple weeks. But that's gonna do it for this video. If you got anything from it at all, guys, please hit that like button and do me a big favor and subscribe as well. I'll catch you in the next video. Appreciate the view. Peace.
Drop.